What's going on, everybody? I have a very special guest on today, Mark Fidelman. This guy is you're going to read about this guy in the newspapers one day as like the legend of tokenized real estate. He's all about tokenized real estate. We did it in a virtual event a few months ago, and we just had a lot of commonalities. He's all about crypto. He's all about blockchain technology, about tokenization of real estate. And so I said, we just got on the phone the other day, and I said, man, let's get on live because we got to start educating the people as to what is tokenized real estate. And I talk about it a lot, and I don't teach it quite as much because, you know, we've got a project that's actually in beta right now, and we're keeping it very small just because there's a lot to learn during these projects. But he's actually got a very interesting project coming up here in Panama that he was just telling me about. But Mark, before we get started, all right, we're in the crypto sphere, and I haven't really talked about the soaring crypto markets and the election stuff that's happened. What are your thoughts on that before we start getting into our specialities here?
Well, it's definitely going to go up, and I'll explain why. Because of the election, Trump has made several promises to the crypto community. The one that most interests me, because I'm more on the tokenization side, less on the crypto side, is that day one, he fires Gary Gensler. In the first 100 days, he's promised he'll have a committee, create new regulations, or at least clarity, one of the two, hopefully both, around crypto and tokenization, RWAs, securities, all of that. So that's great news for all of us. And with clarity comes investment. So let's all celebrate that he did win, whether you like him or not, for the community. He could not have been a better choice.
Yeah, you know, like because I have friends who just absolutely hate Trump. I mean, they hate him to the bottom of their soul. And so my suggestion to the people who hate Trump right now, I would say buy as much crypto as you can, hate him as much as you can, and maybe move somewhere else. Like I moved to Panama. I really don't care anymore, you know, like except for the regulation side. But now, as long as I get my regulation, I'm kind of like, I don't have a dog in this fight here. But that's really the important thing to me, is like getting some freaking clarity, man. This administration that we've had here for the last few years has just been, from the crypto side, right? Yeah. Has just been a dog. I mean, a dead dog. And not just that. I mean, we have guys like you said, Gary Gensler. Gary Gensler, to me, he's public enemy number one in crypto. Public enemy number one. And this guy is such a rat. He is such a rat when you see the things that he talks about in his conflicting statements that he said in the past. So I'm just glad to see this guy go, because this is a big, big, big deal. And, you know, like, look, fine. You want to call this a security? You want to call this a commodity? You want to call this a crypto, a new thing, right? Awesome. Just give us some freaking clarity, you know? And it was just this thing of whack-a-mole, which I really, really, really didn't like. By the way, before we get started here, guys, gals, hit that like button, hit that share button, because we want to share the future of crypto, the future of DeFi, decentralized finance. And Mark's going to be talking and giving us some real world examples as to how we can use crypto and bridge it into the current investments that we have in traditional finance. So Mark, tell us a little bit about what you do and the things that you've done and how it correlates to crypto.
Yeah, so I started as a non-believer in crypto with Bitcoin, thought it was just, you know, play money, monopoly money. And when Ethereum came along, I'm like, okay, now I get it. And now I get the whole thing, including Bitcoin. You know, you got programmable money, you've got money that can move around the world in an instant. You don't have to rely on banks, which are a nightmare and getting worse. So I got that aspect of it. And then when we got into dApps and other things that created things on top of these public blockchains, then I got really excited about the space and started moving my business in, moving myself in. And then with all of the problems with regulation, and I do blame regulation or lack of regulation or lack of clarity of regulation for the FTXs and all the rest of these things that have happened to us. There's been a lot of scam artists and a lot of problems within crypto. So I read the writing on the walls. I knew where we headed. And for me, that's RWAs, which are they're securities is the way they're defined today, whether it's internationally, like where you're at, or whether it's in the United States. And these are, basically tokens tied to a real asset. And if you look at BlackRock, JP Morgan, Franklin Templeton, they're all moving into this industry. In fact, they're oversubscribed on most of their tokenized funds. And I'm here to tell you guys, this is the future. Crypto will still be there for sure. I mean, especially Bitcoin, the top 10 for sure. But RWAs is where most of this is going to go. And it makes a lot of sense to bring liquidity to markets that were never liquid before, and to make it international makes everything more valuable.
Yeah. So the thing that, in my opinion, got me the most excited is exactly what you just ended with right now, which is you're bringing liquidity to markets that before were not liquid. Can you elaborate on that so the guests can understand what that really means? Like, I understand, and that's what gets me excited about this, but I want to hear from you, and I want everybody to understand kind of what that means.
Yeah, a little bit of history on stocks. Once they created stock markets and companies, you could buy shares of companies. The companies became way more valuable. And, a bunch of research has been done, and I'm in real estate, just by bringing a company public and then allowing them to trade the shares of real estate, almost like a mutual fund, but directly for a property. You have now increased the value of that property by 10%. That's massive if you're talking about commercial real estate, which we deal in. Even residential at a larger scale, the bigger residential homes, 10% is a lot of money. So now if you could trade tokens, like maybe you don't like how a building's being run, or the house values in, some parts of the United States are going down, you could sell out. You couldn't do that before. You were stuck in that investment until there was a liquidity event. Now, with tokenization, you could sell it to anyone around the world. Even better, way better, and this has not been realized yet. We're going to get there, if not someone else, where, you look at mortgages at 8% in the United States. Well, if you tokenize and through smart contracts, put all of the information about that property on the blockchain, I can get loans in Japan at 2.5%. They're dealing with the same information I am. They're dealing with the same laws that the banks are in the United States. Why would I borrow at 8% when I can borrow from somebody in Japan at 2.5%? So imagine that world where you have complete arbitrage of loan amounts that are around the world. That's going to revolutionize the whole financial system, just that alone. But there's going to be other aspects of it that are going to happen.
Yeah. So it's funny you say that. You said that the other day, and I hadn't even thought about that yet. I was like, oh my gosh, Mark's right. Like, imagine, guys, gals, okay, you've got interest rates. Is it around 2% right now, Mark?
In Japan, it's like 2.5 or 3. Here, it's 8.5, depending on where you're getting it from.
Right. So 8.5% in the United States compared to 2.5 in Japan. Where would you rather borrow your money from? That's a no-brainer. Now, I'm used to this because I deal with borrowing and lending all day long. In fact, like, I have a lot of Bitcoin that I, put on. It's a borrowing and lending protocol, decentralized application called Frax, and I just borrow against it. And this is as it climbs, and I don't over leverage myself, but as it climbs, that's what I do. So I'm, once we get to the point where we can collateralize that real estate, and you're able to go to different venues where they're like, yo, we're just more responsible over here. And Japan's that, they've just dealt with kind of stagflation. That's probably why they haven't hiked up or lowered their interest rates. Well, no, they've recently hiked up their interest rates, right? It was sub 1% before, or sub 0%, right? Like they
had negative interest rates for a while.
Yeah.
I couldn't believe it.
Yeah. But so this is something huge, because imagine you're not at the whim of the United States banks. You can go truly to where you're going to get the best rate. And to me, that's huge. But here's one of the things that also Mark just commented on that I was such a proponent of, and I still see it. I when I got into tokenized real estate, I thought it was going to take off a little bit faster than it did. but there's a lot of infrastructure to build there, because it is, when you talk to a lot of real estate agents, they're just like, I thought, well, they obviously know what tokenized real estate is, but they don't. And you have to really educate them, because they don't understand that maybe even one day their job may be replaced by decentralized applications such as decentralized exchanges, right? We're starting to see this with some of the real estate dApps that are popping up. But I remember looking outside of my apartment. I was living in Panama City here in the former Trump building. And I'm looking out, and there's like 3 or 4 buildings that I could see right in my purview. And I'm like, oh my gosh, imagine a day where I could own $100 of that building, and $100 of that building, and $100 of that apartment, and $100 of that house. And literally, if I wanted to, I could trade it 24/7, right? So I'm like, oh man, that's making me 7% per year. That's making me 12% per year. That's an Airbnb doing 30% per year, and like, you're just able to go, man, that's an opportunity. And now you're just driving up the price of real estate like crazy. It was right then when it clicked. Now, it moved much slower than in my brain, but I really, really do believe that it's up and coming. Mark, tell us some of the projects that you're working on.
Well, right now we're working on a real estate fund in San Diego. We're working on a big development in Pearl City in Panama. Is it called Pearl City? Or
Pearl
is it,
Island.
Pearl Island, yeah. In Panama, that we just signed on to the platform. These are 2 big ones, an ice cream factory. So you have the factory and the ice cream business all combined. That's another one that we're working on. So it's all across the board. For us, it's always tied to real estate. And that could be a debt token if you just want to borrow against it, or that could be an equity token, or a hybrid. It just really depends on how you want to do it. And then, of course, because it's a token on the blockchain with smart contracts, you can get very creative. If you threw a hotel on our platform, you could say, hey, for every 10 tokens you own, you get a free night or something like that. I mean, you could if you could program it, you could do it on our platform.
Yeah. And that's, a lot of people think that it's so hard. It's getting easier and easier to tokenize things, so we bought an Airbnb down here in Panama, and we're just about to launch. We bought it pre-sale, right? So it's just about to launch, hopefully in the next couple of weeks. We did have to get a small mortgage. It wasn't a big one, but we had a small one because we weren't able to raise the whole amount. But the cool thing is, the actual tokenization part was like that. It took a week. It took a week to tokenize the property. We needed to set up the right entities and all that stuff. You need, there is a proper structure to making sure that it is compliant venue by venue, and each venue is different. That's why I'm sticking to Panama. My goal is to have, hundreds of properties here in Panama that are tokenized, and that we're just able to trade here. And we're very compliant. We use some of the best lawyers here, but this is key. And this is where, like, I think some of the struggles that we face tokenizing things, because you do have to come up with a lot of capital, right? And you can do hybrids. The cool thing is you can do hybrids. Like ours, we have 50% of the property that is being mortgaged, and 50% that has been tokenized and raised with some equity. So you when you do these things, it's not just like let's just go and tokenize everything. It could be as simple as that if you had owners that got on board with that, but it's probably not going to be that. Where people are really going to see the boost, in my opinion, is when they see how easy it is to buy and sell. And some of these owners are going to go, holy crap, I can sell my property tomorrow. Mm-hmm. If I tokenize it, it takes me 1 week, which is way less than escrow. Then I put it on a decentralized exchange, and I might get a 10% bump, and I don't have to pay a real estate agent.
Right.
I don't know. What are your thoughts on that?
I mean, that's going to happen. We're not quite there yet, but it's definitely going to happen. All roads are leading that way. More and more things are being tokenized. And I think you'll see that a reality in 1 to 2 years. I don't think it's going to be that long.
Really?
Yeah, I mean, the only thing missing is a robust secondary market, like a crypto market. So those are being built. You're going to see a number of them launch this year, and we'll all be sharing our secondary market trades with one another. So it won't be like crypto where it's just listed on one exchange and it's a pain in the ass to list on another and another and another. We're all going to, hopefully, all of us are just going to share our listings on each other's platforms in real time. I mean, it's on the blockchain. So that's the only piece that's missing. Once that's there, and then we get into DeFi, where even if you didn't sell your tokens in 1 week, you could borrow against them at the lowest rates in the world. That could be instant.
Yeah. Yeah. And we're actually working on this on our end. We're actually working on a borrowing and lending protocol on our end. And by the way, if you guys like what you're hearing about tokenized real estate, can you smash that like? And if you're not subscribed, subscribe, because we're going to keep bringing you some hot info like this, and share this. Come on, get the word out, because the old way is done. That's why Mark and I are collaborating, because the old guard, the old slow, let's buy some real estate nice and slow, that's done, you guys. And you're hearing it from an expert. Mark's in this every single day. I probably dip my toe in, once a month. Mark's in this every single day. He's saying that within the next 1 to 2 years, you're going to start to see things hyper accelerate. And I want to bring something up that I think I want to elaborate on, because, a lot of what we teach decentralized finance, and a big part of what we talk about is borrowing and lending. And so I right now we use actually Block.Square. I don't know if you've heard, they're actually out of, they have some of their guys out of Dubai there, I think. And we just got put onto their marketplace. So we had our own marketplace, and now they've put us on to their own marketplace where they've KYC'd all their people. We had our own KYC process to make sure that we had the right investors in. And it's pretty cool, because like you said, what's going to soon happen is we're going to be able to list our tokens, because they're just tokens. That's it, right? But you do have to have the right infrastructure of marketplace in place to make sure that consumers are protected, that they're not going to buy some scam token and then it's, not even swamp land, it's swamp crypto land, swamp fake crypto land. That's a big deal. Do you have any providers that you're actually working with that are building these decentralized exchanges? Or they're going to be somewhat centralized, because you're going to have to KYC in order to get them, to make sure you're the right type of investor.
But you can do that in the wallet itself, or if you use like Ethereum 1400. But we are starting to work with some of them that are creating early versions of this, and they are out there. Obviously, we would want to work with you once you have it up and running, and we'll build our own in a couple of years, maybe sooner, depending on how things go. I mean, that in itself is a massive business, and it might just be something that we do only. But at this point, our plan is just to get as many properties tokenized as possible.
Yeah.
And then we can play with all types of DeFi and secondary market trading types of activities.
Yeah, I mean, that to me, and that's why I had to slow my roll. That's why, half of Panama isn't tokenized yet, was because seriously, when I saw, the complexity of raising the money. See, you got to have the marketplace, guys and gals. So, my plan for tokenized real estate is taking, I've got my high growth stuff in crypto, my Bitcoin, my Solana, my Ethereum, and we have some algo trading systems on chain where we've tokenized the actual strategy. But those strategies are printing money right now. So what I plan on doing is taking that money and bringing that over to the more solid, maybe not as high growth, high risk stuff, because, last thing I want to do, even with our strategies, you still can have a 17% drawdown, in 1 month. And so what I don't want is to have that money where I'm just like, come heaven or high water, I have this passive income coming into me no matter what, and that's in the form of my rent, or, I like what you've said about having hybrid tokenized strategies, right? You could have the land on there, and then you maybe own a part of the business that's on the land as well that produces a higher ROI. You said that you guys are doing that. Can you explain a little bit more on how that works so people can get the understanding of that?
Ask the question a different way.
So like, let's say for instance, you said that there's like a business that you guys are working on tokenizing that's got that's a property that you're tokenizing that had a business on it,
Yeah.
right? Like an ice cream business or something like that.
Yeah, exactly.
So explain to us like how that could warrant like more yield to the investor.
Yeah, because and you could split these things into classes and what have you, but you know, our goal is you have the real estate as the collateral, you have the business as the income generation. And so I just look at it like that, or a hotel, same thing. And it should become more valuable because now you've tokenized the real estate and the business all in one, because the same party owns both. And it's generating more income than just the rental if they were renting it from the real estate. And you have equity in both an ice cream business, and this is a pretty lucrative one, and the factory itself. So the token can expand in price almost exponentially if the business does well.
Yeah. So, and this is something that I like to break down because not a lot of people like understand this. And this is where it gets like really, really cool, right? So let's say, for instance, your ROI on the ice cream business is 20% per year, right? With that plus the maybe the rent that is paid back to the owner, the owner that's included in this, right?
Yeah.
So let's say, for instance, now that token appreciates by 100%. You're still receiving a 10% ROI, right? So it's almost like a bond or I guess maybe even a stock where, you know, you're measuring it in those terms where you're like, hey, am I willing to take this risk in this business, right? And pay a little bit extra to have like a really, really good, solid income or dividend that gets paid to me. And so you're going to, like you said, Mark, as long as that business keeps growing, you can have an infinite expansion of that crypto token, which is really, really cool.
Yep.
What are your thoughts on like securities tokens that might be like equities, such as like stocks and all that stuff?
Well, there's already people doing that. So they tokenize stocks in the US that can't be bought or traded anywhere else. And once you tokenize it, of course, you could trade it anywhere. So they're already doing that. BlackRock in a big way. In fact, they started with a $100 million bond fund, and now I think it's grown to over $1 billion. They're trading bonds that way. So it's already happening in a big way. It's not the norm yet. You know, we're still looking at 5 years for something like that to happen. But, you know, when you look at the new regulation that I think it's going to appear here, why would you ever go public on the NASDAQ or New York Stock Exchange if you can go public globally all at once on some sort of a tokenized exchange? And believe me, they're coming, not just real estate, but they're coming in all forms.
Yeah. See, a lot of people don't realize this. They just think crypto is, or tokenization is, you know, meme coins or Bitcoin, and it couldn't be further from the truth. No. You know, do you remember Polymath? Did you invest in Polymath back in the day? I
didn't invest in it, but I of course I know about it.
Yeah, so they were the first ones to kind of come out and say, you know, securities tokens, they didn't really go anywhere. Right. I was super bullish at the time. And then I tried reaching out to them to tokenize real estate, and they didn't even get back. It was like the worst customer service ever. So I was like, yeah, that's probably you guys.
That's PR stuff.
Like, yeah, well, or a pump and dump too, unfortunately. Like a lot of these guys did a huge raise and made lots of money back in 2017 and 2018. And then they just like, see you later. Thanks for the raise. You know, right. Here's your worthless token. But you know, here in Panama, they're doing the same. A buddy of mine is actually working with the legislature to put out the first tokenized exchange where you're gonna, as a Panamanian, you're gonna be able to buy anything that's listed on the NASDAQ on the Ethereum network through their their centralized blockchain app, I should say, because it's not decentralized per se. And you're going to be able to buy any ETF out there. So that's in the works. And that's something that, again, I'm starting to see so much of this activity pop up, and I'm going like, how can you not be in crypto right now? Like literally there's so many opportunities everywhere. Right. Mark, tell me about this project in Pearl Island.
Yeah, it's 12 residences. We're starting with 12 residences. It's right next to where the future home of the Ritz-Carlton Reserve hotels and residences are, in the first ever Viking branded fishing village. So it's, the Pearl Island spans 3,500 acres. It's already has a lot of things on it. 70% of the island is dedicated as natural reserve. So this is a very unique set of residences, 11 residences that we're going to tokenize and then sell off or just to allow people to invest in.
Yeah, nice, man. I've never been to Pearl Island. I live here in Panama, for those of you who don't know, and I've never been to the Pearl Islands, but I've heard a lot of really good things. And Mark, right before we popped on, he was talking to Ruben, our backstage guy, and he says, yeah, there's going to be a Ritz-Carlton. And I was like, what? There's not a Ritz-Carlton here right now yet. And I've been waiting for one because, my blood is very rich and I need a Ritz-Carlton around me.
There you go.
Especially with how much money we're going to make in crypto in the next few years. Now that we've got a different change here.
Yeah, it's going to be big. I can't stress that enough.
Yeah. So they're bringing the Ritz-Carlton. Let's end. What is your goal with all of this tokenization, Mark? Like, when people ask, like, what is Mark's purpose in all of this? What are you looking to do with all of this?
Well, I'd like to take you back to my 20s when I was making a pretty good living, but not able to save a lot of money. And I had the income to buy a house, but I didn't have the savings to buy a house. And so for all those people that are out there, had I started when I was 20, just buying tokens, and I liken the math, it's about $1,000 a month. Had I just bought $1,000 a month over 10 years at a normal return on real estate and reinvesting the dividends, I would have had a $20,000 a month passive income by the time I was 30. And it's truly passive. Other people are managing this, not you. So, that's at 30. What would it be at 40 or 50 or 60 or 70? You'd have just a massive passive income. You could go enjoy your life in Panama and several other places.
Yeah, no, that's great. That's great. And, that's where about 50% of my profits from this crypto market are going to go into tokenized real estate, and not $1,000 a month. It's way more. But like Mark said, though, guys, gals, if you're starting in real estate or in crypto, you don't have to make it this hard process. You don't have to save up now a gajillion dollars and then wait 30 years and then maybe get wrecked on a fixer upper or something. Now you can pick and choose, from your home while you eat, while you're cooking at home with your family. You can go, hey, I want to invest a little bit on that one and a little bit on that one and a little bit on that one. Mark, because some people they've told me, like, oh, so it's like a REIT. Can you explain the difference between a REIT and tokenized real estate?
Sure. Of course. Well, first of all, REIT takes a management fee. You're investing in a portfolio of real estate you don't control. So somebody else is picking the real estate that you're investing in. REITs are great. I'm a fan when they happened in the late 1960s, if I remember correctly. It was a big revolution. But you can't buy them outside the United States, not easily anyway. You can trade them. There's liquidity for the market. But again, you're investing in a portfolio of projects. You have no idea what it is, how they're performing, not a lot of transparency. You're just relying on them to give you a good return. With tokenization, you can invest in a property. You can invest in a room in a property. You have all these advantages around the smart contracts, meaning you've got complete visibility to your investment. Plus, if you could program it, like I said, you could have all these perks as a result of investing in something like that. So those are the main differences. Obviously the big one for developers or real estate owners is it's so far less, like 1/200th of the price of building a REIT than just tokenizing it and putting it on our platform. I mean, it's very inexpensive to do that on our platform, very expensive to create a REIT and to fund it.
Yeah, 100%. You know, like a lot of people, they don't like, and that was the thing that turned me off the most to the REIT, right? They're like, oh, okay, you got like this huge center, Home Depot and Lowe's, you know, like a Costco, but you can't really pick and choose like, oh, I really like that one, but I don't like that one. Or I just want to invest a little bit here just to hedge myself against this. Or I want an Airbnb, or I want a long-term rental. Like that was what appeased me when I saw the capabilities of tokenized real estate. All right. And now, so actually I want to read a comment here real quick that, let's see here, that Botanical Bro put out, which said, practice caution with crypto. 1 whole ETH and some Bitcoin was stolen from my Ledger wallet, despite my Ledger wallet info being ultra secured. I don't know how that happened because, I would know about a breach. I'm super, super tight with Ledger, and that's all I ever use. Maybe you signed a faulty smart contract. That's happened, Botanical Bro. But when you're talking about securities tokens, Mark, and I don't know if you know this, the cool thing about securities tokens is that if you do have them stolen, you can have them reissued. Am I correct?
You're correct. It cannot be stolen. Somebody can get into your wallet and take them, but you would just call up the developer real estate owner and say, hey, these are stolen, cancel those, reissue them. It's that easy. It just takes literally 5 minutes. So literally that is not going to be a problem with security tokens.
Yeah. And guys, gals, that to me is one of the coolest things, because again, it would suck somebody runs off with your tokens and they're getting your real estate dividends. But with securities tokens, you do have extra security in that you can have them reissued, and then they just send it to another wallet, and you're right as rain. Now, the difference is, and you have to understand this, because if you leave your money in that wallet and for some reason your wallet gets compromised, well, then and let's say you have DAI or USDC or Bitcoin or Ethereum from those dividends that you received, that can be stolen. But the actual tokens that you have that might be generating yield and that you can sell on the market will be safe, which is something that I really, really liked, because let's just face it, there are some realities with crypto. I take extra safe measures to make sure that, I have multiple wallets all over the world are safe. Something happens to this one, all right, I'm cool. I have another one. It's not going to feel good, but I have another one ready to go, So that's always something that really did appease me. Mark, how can people find you and follow what you're doing and participate in what you're potentially doing?
Yeah, well, they go to Smartblocks with an S.xyz. Sorry, that's where you go to sign up. We have a few properties that are on now, and a few more that are coming on. A few that have already been funded and archived, but there'll be a lot more as we're in discussions with multiple developers. The problem with tokenizations, we have to weed out the ones that we don't think we can get funded. So, but we turn down about 80 to 90% of developers or real estate owners that are coming on board. Less real estate owners because they already have a performing asset. Most of the ones we turn down are developers with this grand vision of what they want to create. But unless it's like government backed, we scrutinize those to death, especially internationally.
Nice, man. Yeah, it's funny. Once people started finding out that we were in tokenized real estate, and some of them were like stuck in properties that they couldn't get out of, and they saw the liquidity opportunity here, they came out of the woodworks. Man, I have some real estate, and the issue was that we turned down, like you said, 90% of them, and it was like, whoa, man, people will sell you whatever. So it was not a good thing. But at the end of the day, the cool thing is we get to pick and choose which are the good ones and which are the bad ones.
You do.
So cool, man. Awesome. Well, guys, gals, you heard it. Smartblocks.xyz. It's there in the description. And we've also got a DeFi educational program where we teach you how all of these things work. Click on the link below. I've created a little video for you to show you exactly how we're making money in DeFi and how you can participate in it as well. So we look forward to seeing you guys on the next live. Mark, thank you so much for joining me. And I will talk to you soon, man. Hopefully in the next couple of weeks when you come out here.
Yeah, about a month.
Awesome. Awesome. All right. We'll be waiting for you, bro.
Thank you.
All right, Mark. Cheers. We're going to end the stream.